Good evening, traders. Today is Thursday, December 8th, 4:22 p.m. Central Time. Markets are now closed. Well, the markets were holding back today. They had a modest day in the green. What was it? What were you waiting for? Down here we have, the Dow plus 183. That's not too bad. Just modest day. The VIX was down almost 2%. Almost 2%. Why didn't you run? Run, Forrest, run. What's holding you back? Gold was also up. The dollar was down, as I'm going to show you a little bit later. What happened? Well, I think we're waiting for the main event tomorrow. Producer Price Index, 7:30 a.m. Eastern Time before market opens. I think that's what the markets are waiting for. They are holding back because they had every chance to run today. I'm going to show you the VIX chart a little bit later, but they didn't run. Okay, so that's good. That's a good sign, actually. Here's the MACD on the S&P 500 today. You'll see that it's kind of flattening out and actually starting to come down. I'm going to show you a little bit later why that's not a bad thing. Okay, that's not a bad thing at all. But so let's get on into it, and I'm going to first show you a very important slide. Actually, I've shown this slide in the past, but I've since kind of doctored it up and added a couple things. Now, I will say that it's mainly for the newer viewers who haven't been or are new to the channel, that right now for the last month we have been trending against the S&P 500's weekly SMA 50 line. For SPY, it's 404. And the support is the weekly SMA 20, SPY 393. Okay, we have been in this range for the last month. Okay, so you're thinking, yes, okay, big deal. Why is it a big deal? Because these two lines, the weekly EMA and the weekly SMA, have single-handedly denied the markets the entire year for 2022. For all of 2022, these two lines have denied the markets. That's why it's significant. Okay? Now, let's get into some history. As we know, in January, that was the peak. Let's look at April. And I'm just going to call your attention to the SMA line here and the EMA line, the weekly EMA line, red line here. It failed the SMA first. 3 weeks later, it failed the EMA. Okay? Comes tumbling down. It tries to come, it bottoms in June, tries to come up in August. But in August, it failed the EMA first. 1 week later, it failed the SMA second. Tumbling down to what is currently the October low, October 13th low. You guys know that's my favorite date for those existing returning listeners. Okay, from the October 13th low, we now have rocketed up, which brings us to December, right? Brings us to December, which brings us to this channel that you're looking at right now. This is the channel as of today that you're looking at right now. What's different than in the past is this red EMA, weekly EMA 50, SPY 404, and the weekly SMA 20, SPY 393. All year long, as you just saw, we've been failing both lines. But yet, in the final month, in the last month, we've been ping-ponging as resistance and support between these two lines. We have yet to fail. We have come close, but we have yet to fail for the last month, the SMA 20 line, 393. Okay? That is a very important distinction between the month of December and most of November, since November 10th-ish, right? November 10th. We're sitting on December 8th now. So it's been a month. It's been a month since the November 10th CPI surge that put us into this range. It put us into this range that we're in now. Okay? This is significant because all year we have been failing the SMA 20 or the EMA 50. But for the last month, we've been holding. So we've gone from down, 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 up to neutral. That's where we are today. Okay? That's why I'm thinking, now that I look back over the events of the past, we'll just say week with this major downturn right here, right? The market makers aren't going to let us crash just yet. That would just be too anticlimactic for 2022. It would have been too easy, too convenient to just let us keep falling down, right? So instead, they let us kiss the November 17th low, which is right here, and we kissed it again. And then we made a higher low, and now here we are. Okay? They are not going to let it end that quickly. Okay? Now, basically here are the notes. Since November 10th, we have been in a neutral trading range. EMA 50 as resistance, SMA 20 as support. Okay? And when I think about further, okay, why would the market makers do this? If they would have just a couple days ago crashed the markets on us, to them that would actually be less profitable. And you're thinking, why? Well, because now you're only giving money to the bears. You're not taking money. You're only taking money from the bulls, giving it to the bears. So only half of the party, 50% of the people trading, get money. The only way to maximize markets, the market makers' profits, is to take it from the bulls and the bears. So that's why they're not going to allow us to crash just yet, in my opinion. They want one more rally, one more time, so that we can get the most FOMO, fear of missing out. Here come the Johnny-come-latelys, right? Here they all come. Pile it on. Let's make some money. And then after we've piled it on for everybody, now we're going to take your money. Now we're going to rug pull you. Okay? That's how you maximize profit. That's why the bulls, that's why they need to maximize for the remainder of 2022. You guys got to pile on. According to them, we are the dumb money, right? We're the dumb guys. Okay? So, what is the moral of this whole slide? The moral of the story, it is this. SPY 393, the weekly SMA 20, it must hold for this rally to stay alive. Because this line, the weekly SMA 20, has served as either support or resistance that has rejected the markets for all of 2022 that I have just shown you. That's the moral of this story. SPY must hold 393 for this rally to stay alive. And so far, so good. Okay? All right. Wanted to point out today's pattern. It was basically a wedge. You guys probably figured that out. Right here, there's the wedge. Okay? It was a mid-range wedge. Not ascending and not descending. Right in the middle. Okay? Okay, that just tells you it's consolidating, right? Okay. So, wanted to kind of make that slide because in a way, I'm throwing out this slide for you guys to see so that it's actually beneficial each day that you come into a trading day to try to the best you can anticipate which one of these trends will dominate. Okay? Which one will dominate today, right? I don't think it would have been descending on either channel or wedge. I doubt it, right? I would think it's because it's still trying to recover from that massive fall from a couple of days ago. It's either going to be mid-range or it could be a combination of mid-range to ascending channel. You've seen that before, right? As you just saw in the previous slide, let's just take this, expand this out to a few weeks. It was ascending channel from October 13th, converted to mid-range in November and December, right? So you can go from one, you go from this one to this one, or this one to this one, right? Okay, so that's what, and I also mentioned, if you can try to anticipate what you think the pattern is going to be for that day, it will help you react to certain things like today. Because today's a wedge, well, what happens at the beginning of the wedge? Those are the biggest moves. It was a big move down, and then a huge move up, and then a big move down, right at the following the EMA and SMA lines. This is the 5 minute chart, by the way. Oh, sorry. Oh, yeah. It's 5 minutes chart. Okay. So if you can try to think, what's the pattern going to be today? It can help you maybe anticipate, oh, big move down, big move up, come back down, chop, 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 up, down, chop, chop, chop. Okay, it's trying to build a wedge. Okay. Try to guess what it's going to do for that day, all right? Okay. Okay, so last night. This is a video from last night. Oh, sorry. From this morning. Here's where I say, for SPY, it's tracking to the 65-minute EMA right here. So here's the 5 minutes chart. This is before opening bell, by the way. So what I was referring to is, here's the 65-minute chart over here. Because I saw a lot of support and resistance action, I said, yeah, I bet it's tracking to the 65. So as you see here, here's this resistance, and the SMA is support, right? Just like very similar to what you saw on the weekly just now, a couple slides ago. Okay. Now, so yep, I said that in the video this morning. How did I do? Here's the activity for today. Well, let's look here at the 65-minute. It tracked to the 60. It looked to the 65-minute. It was tracking to that one. See that? All day it tracked to the 65-minute EMA 50 line. Just hung out right there, right? Kind of came up and just hung out basically the whole day. Okay. So a lucky guess. It was a lucky guess. All right. Now, call your attention to a couple things. When you're in a wedge formation, you know how I always say the back test has to be successful. If you don't succeed on the back test, it's likely just going to fail. You're going to fall further. There are caveats to that definition, though. When you're talking about a wedge formation, you see that it was failing, going up, failing, going up, failing. I consider failing, as you know, to be all those candles or straddling the line. So actually, technically, we had a lot of failures today, right? How many times do those candles just straddle the line on the back test side? Many times, right? So, but when you're in a wedge formation, it's okay. I say okay, meaning it's not bearish. That's what I really mean. It's not bearish per se when the candles on the back test like this, right here, that failed. That technically failed the back test. But when you're in a wedge formation, you're not going to fall. Okay? However, if you were in a rising channel formation, oh yeah, you better start, you know, that could definitely, you fail the EMA on a rising channel formation, oh yeah. You're going to go, whoop, bye, good night. Okay? Even descending channel, which is typically bullish, but you could fall out of that channel if you're starting to fail. Okay? All right. So, all right, that's what I want to show you about the wedge. So that's the 65-minute. Check out the MACD. See? Okay. This is actually not a bad sign. This is the 5 minutes chart. The whole day kind of just going down. So in the morning it peaked and then it kind of just downish, right? Sloping down. What it's trying to do is, here's a 30-minute. See that? It's causing the 30 minutes to flatten out, and it's causing the 1 hour to kind of flatten out. And that's actually not a bad thing. I'm going to show you late in a couple slides from now that you want the 1 hour to flatten out before a big event like PPI. You don't want to be surging coming into PPI tomorrow. That's a bad sign, actually. That's a sign that the market makers are trying to fool you into FOMO, into Johnny come lately, into becoming a Johnny come lately, so that you could get in, only to get rug pulled the following morning during an hour by which you can't even trade. Okay, so that's what don't. If it was actually surging today, that's bad. I'd be like, oh no, something's not right about tomorrow. Then, okay. So that brings me to VIX right here. VIX is going down the whole day, yet the market stayed flattish. That's actually good. The markets didn't bite. The markets could have and had every reason to just take off running, but it didn't do it. Okay, that's actually I consider that a good sign. That's not a bad sign. Okay, but just because of the fact though, it came out. Here's the 30 minutes chart. The MACD still stayed way above zero. Or wasn't coming down, right? It was just kind of coming down a little bit, but I consider that kind of bullish consolidation, right? That's not falling, like down, like this. Yeah, okay, like this. Here, see, look at the MACD like this. That's not like that. That if I saw this, oh no, that's a bad sign. You going below zero and stuff like that. But no, it's just kind of no flattening out. That's okay. That's perfect. Okay. And look at the 65-minute RSI where it finished on SPY. See that? Flat 54.85. That's actually good. That means you're not expending your energy. You're consolidating and you're waiting for something. Okay. I'm glad to see that today was not an impulse rally. Okay. I'm actually glad to see that. All right. So that is SPY. This next one here is TQQQ. I'm not going to say anything more about that. Everything I wanted to say was on the SPY chart. Okay. TQQQ pretty much follow the same thing. See that? It's tracking to the 65. The MACD, everything's the same. So I won't go over that anymore. I just wanted to put that slide up there just for posterity. Okay. S&P futures. On the left-hand side, you're talking about the 4-hour chart. On the right-hand side, you're talking about the 1-hour chart. Let's check this out. Look down here, okay? Let's go ahead and zoom on in a little bit. Let's zoom on in. Here we go. Looking good. 4-hour chart. Got some separation there. Separation, right, from the signal line. And it's very early. I will say that looks bullish because I have yet to find a pattern where you got separation early on and then all of a sudden you curled back down. Okay? This is probably a notch. This is creating a notch before the big move. This is this is a good sign after a big, you guys know it's a pretty big fall right here. Now we're getting separation, okay? Just like we get separation here, just like we get separation here. Always results in follow through. We got more of this coming, okay? That's the 4-hour chart. S&P futures 1 hour. Okay, so here's where the previous slide where you saw, it needs to kind of start flattening out. I kind of want to see that. And actually tonight in futures, I wouldn't mind if it actually kind of starts to go down a little bit, just a little bit, to where it's maybe getting closer to the signal line. Is just kind of hanging out right there, right? But don't what we don't want to see. Well, we see like this. Here's an example of this, or this. See that? But something before we want to see some kind of consolidation going on like that, and before the big move. We don't want to see us going up all night like this in futures all night like that. No, 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 no. That's not a good sign because I think the only logical conclusion is, well, you're probably going to go down then by the next morning, right? Okay, so that is S&P. Okay, Nasdaq, pretty much this very similar, right? Here's the 4-hour chart right there, separation, right? So very similar formation with S&P futures. Okay, similar deal. Similar deal. I hope you kind of flatten out there a little bit, but flatten out, because you know we don't want you to. Yeah, I just explained it. We just don't want that. Don't keep going. Flatten out. Okay. All right. So. Okay, here we go. Last night. This is last night. Last night's video. Let me see if I can zoom in just a little bit here. Last night's video, I said right here, into the negative, down below the signal line, right? No disputing that right there. I was talking about right there. This is the MACD, the 4-hour chart. I'm sorry, I think it was the 1-hour chart. Okay, so last night, you see it top out, and it starts to curl down right there. See, a little bit, but it's already starting to separate from the signal line. A little bit, but already started to, right? So that was last night. And then I said, yeah, this looks weak to me. I think we're on a multi-day downtrend. I said that last night. Well, let's see what happened with the VIX today then on the 1-hour chart, shall we? Well. So this was last night that I was commenting on right there. It looks like it got a whole lot worse. Okay? And then look at how close you are to the zero line. This is the 1-hour chart. You go below that zero line. Okay. Here's this zero line on the 1-hour chart is equivalent to the EMA 50 line up here. You cross down below that, you can expect something like this. Down, 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 down. Okay? And honestly, I mean, there's a chance it can do something like down and then up tomorrow. That's a chance if PPI comes out hot. If PPI comes out hot, there's a chance VIX will come down and then do this. But right now, that doesn't look good. Okay? That does not look good as of right now. Ultimately, I think this red X is where VIX is headed to. It's not necessarily a straight line, as you see here. It can do this. But ultimately, VIX is headed somewhere down here. And right now, when we're talking about PPI tomorrow, and then we're talking about CPI on Tuesday, and then we're talking about FOMC on Wednesday, which, by the way, on Wednesday, that was at 2 o'clock, right? 2 o'clock, and then 2:30 is the press conference. I'll probably be doing a live trade session just to do it because I want to trade it, So, just throwing that out there for now. Okay? So, this doesn't look good for VIX, guys. 1-hour chart. It doesn't look good, right? See that? Doesn't look good. So, I drew these red arrows as just examples of, and this is not specific to VIX. It's any equity. SPY, Tesla, Amazon, Walmart, Dollar General, doesn't matter. On the hourly chart, when you make big moves like this, call them big triangles. Big triangle moves. All triangle moves basically have a 100% retracement. Right? See that? Like, for example, if you wanted to make this one big angle right there, see that? Well, guess where ended up at the same level. See that? So that's why I threw the X right in here. I could have put the X a little bit even lower, but I'll just give you the benefit of the doubt. Make it just slightly higher than this one, because I saw this one slightly higher than that one. Okay, but I think you got more to fall, VIX. Sorry to say, bud. All right. Left side is US dollar, right side is gold. Why am I bringing this up? It's because US dollar, as you know, is related to CPI and PPI, right? If it comes in hot, the dollar's going to skyrocket, right? That's just the way it is. If it comes in hot, the dollar is going to skyrocket, right? That's the way it's always been all year. Okay. This one is interesting. Let me zoom in. We'll start with the dollar first. Okay. This is a 4-hour chart. Look at that. The 4-hour chart is in the negative now. And you got a whole lot more to go there, bud. Right? Remember that discussion I just talked to you about? Where on the 1 hour chart, and this is the same is true on the 4 hours chart, you go up a certain distance, oh, you're going to come back down. You're going to retrace about 100% of that. In this case, it was more than that. But you see what I'm saying? You've already gone up this. Now you're kind of coming down, up, and now you're on the next leg down, and now you're in the negative. That's bad. That is suggestive of a PPI tomorrow, suggestive of the PPI tomorrow, and suggestive of the CPI next Tuesday being cool, being down. That is suggestive of that. You see what I mean? Because you clearly have lost momentum. You are making lower highs here, here, and here. Lower lows here and here. When's the next low going to go? You got to go down here somewhere. Right? Okay, now having said that though, here comes the yeah but. Yeah but. Look at the 1 hour chart on the dollar, on Dixie. It's trying to flatten out. It's starting to flatten out. Look at the 5 minutes chart. Up, 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 trying to get close to zero. See what I mean? So although the 4 hours chart looks weak, let me reason through this. See, okay, so it's trying to flatten out. Trying to flatten out, and this is a lower high than this. See, that to me is not. If for example, we'll just pretend like this example. Let's pretend this is the 1 hour chart, even though it's not. If we were here right now, right? If we are right here right now, I'd be worried. Because it's already come down, it's come up, come back down, and made an equal low for tomorrow. I'd be worried. But this is a lower low than that. Nah. You know what I mean? Like, for example, here's another example. Let's just pretend right here that I'm circling is the 1 hour chart. If we were right here, after coming down, coming up, boom, making a higher low, ooh, I'd be worried. On the 1 hour chart, I would be worried. I'd be like, oh no. Dixie's about to make its comeback, Dukes of Hazzard style, you know. Okay? So, just keep an eye on it. We'll see. I see the macro trend being weak, but yet I see the 5 minutes chart headed back to zero. But the 1 hour chart doesn't look that strong either. So I think you got 2 out of 3 against you for the Dixie for PPI tomorrow. Okay? This one is, okay, this is gold. Gold. Why am I bringing up gold? Because we all know gold is the arch enemy of the dollar, right? If the dollar is up, gold goes down. If the dollar is down, gold goes up. We just generally know that. So it's the anti, you know, the opposite the opposite. Okay, 4 hours chart, gold. It's already come down. It's now coming up above the 0 line and separating. This is the 4 hours chart. When the 4 hours chart's doing that, that's pretty good. That's pretty solid. Okay, that's pretty solid. So, to take the words from another YouTuber who's very popular in the financial space, I'll credit him. He's the maverick of Wall Street. He likes to phrase gold in relation to the dollar. He likes to say, if does gold believe what the dollar's saying? Does gold believe it or not? Basically, is gold buying into the dollar's decline or not? Okay. Right now, as of the 4 hours chart, it appears gold does believe the dollar is declining. Okay, that's the 4 hours chart. Now, let's look at the 5 minutes chart. Okay. Come down, come up above the 0 line, come down, making higher low, and futures tonight, it's going back up. So, that does imply gold thinks, yeah, you're not going to do anything to me, dollar. Okay, that implies that. Now, I want to show you one, yeah, but, though. Here's the 1 hours chart. I do see bearish divergence on the 1 hours chart. You clearly see that's going lower. It is still above the 0 line, yes. It is, yes. But it's going lower. Now, let me go up here. Right here, see that? As price is going higher. Right? That's the one thing you need to look out for. I'd rather not see bearish divergence there. Okay? Yeah, I'd rather not see that. So it's like, okay, I see some yeah buts on both the gold side up there and the Dixie side. Okay? So if this were boxing, if this were like a heavyweight title fight, you're like, well, at any time somebody could knock somebody out in the last round in the final 30 seconds, right? You get that, you got the lucky punch. You knocked him out. We've seen it before. So, but boy, the VIX does sure look weak, doesn't it? Right? So, I would say watch futures tonight. Okay, watch that. Keep an eye on it. Make sure it doesn't surge. Make sure it just stays tame, stays calm. Okay. Okay, so that's basically all I've got for you guys tonight. Feel free to follow me on Twitter. I post real-time tweets as much as possible. And if you like the video, please give it a like, share it with other traders, subscribe, and click to be notified when I release another video. And with that, I am Agent 000, the Wolf of Wall Street, signing off.